Sawadee. Very good afternoon to all. After the two impressive presentations, I'm pretty sure you all now should be very impressed by the power of GIS data, right? So my talk today would take stock of the GIS data that we have been working on at our institution, and we'll try to use this GIS data to provide some perspective on the household finance in Thailand, as well as to show you the current work that use GIS data to design some policy. So in particular, there will be three sets of data that I'll be introducing to you today. So first, I'll bring you to the internet scrape locations of financial service provider in Thailand. That basically provides some measures of proximity to financial services in Thailand. Second set would represent some form of participation in financial market, and those are the data from National Credit Bureau. And lastly, we'll try to look into vulnerability of household in Thailand, and so try to link this data with some shocks actually based on the satellite disaster data. So and lastly, we'll try to also show you the current work that basically use satellite data to create agricultural risk information that can actually crowd in the development of agricultural insurance program in Thailand for rice farmer. So without further delay, let me start going. So just to let you know, I don't have my PowerPoint printed, so I encourage you to follow me through the screen here. Okay, so the first set of data that I'd like to introduce would be the data that we scraped from Google Maps. So 41,000, more than 41,000 points of financial service providers. So those include formal institutions like branches and ATMs of banks, of SFIs, as well as non-banks. Those also include semi-formal institutions, mainly cooperatives, as well as pawn shops. And last but not least, it also includes informal institutions like community finances, like savings group, as well as insurance group that are available. Just to let you know, semi-formal institution doesn't include village fund, simply because we can't really find the location of village fund on Google Maps. Even though we find it, it's very hard to understand if they are still in operation. So this data perhaps would underestimate the presence of semi and informal institution. Another informal institution that won't be included in this data would be the money lender, as it's going to be very, very hard for us to scrape from the internet. So I think I forgot to click, so these are the points for ATMs. Now the question becomes, what can we do with this data, right? So very basic thing we can do is to create some traditional measures of availability of financial services. For example, number of ATM per capita, right? So this graph basically plot number of ATM per 10,000 people in each tambon, right? So what we find really is that there are about, on average, 1.2 ATMs per 10,000 heads in each tambon. If we try to look into the number of ATM per 1 million people in each province, we plot here, and the mean of those is about 70 ATMs per 1 million people in each province. So the presence of ATM, for example, in Thailand is quite large, right? So this measure, however, that doesn't say much about the proximity to financial services. Right? The good thing about our point data is that we can do more. We can measure more. We can measure the distance to financial services. So for example, here we have ATM points. We can overlay that with more than 70,000 points of the village. And what we can get is, for example, the measure of the distance to the nearest ATM. Right? Those are the measure of proximity to ATM. We can also measure, for example, number of ATM within some X kilometer from the village. Right? So those give you a bit more measure in terms of the proximity to financial service. Now, what do we get in terms of ATM? So from all the ATM points, we basically come up with the distance to the nearest ATM for each tambon, right? And so overall, on average, it's about 5.9 kilometers from the village to the nearest ATM. The second measure we have is the number of ATM within the 5-kilometer radius of the village, and we get a mean of about, so within 5 kilometers you get perhaps 1 ATM in each village. Right? So let's try to look at the distance to the nearest ATM, distance to the nearest formal institution versus semi and non-formal institution. Right, so we find here, when we say formal institution, those include branches as well as ATM. Right? So what we find really is that on average, it's shorter for semi and informal institution to reach the village. Right? It's shorter by 100%. So the mean distance mean distance toward the nearest semi-formal institution is about 3 kilometers, whereas the mean distance to the formal institution is about 6 kilometers. Right? Now, this measure, however, doesn't really compare the relative distance between formal and informal, for example, within each village. Right? We can do a lot more than that. Okay, so before we do a lot more than that, we can also look into these patterns as well. So we find that there's also large variations in terms of the distance to those financial service providers. We find in general, Bangkok and vicinity basically have the shortest distance to any kind of service provider, whereas we find the northeastern part, the distance to the nearest of any financial service provider appear to be the highest among all other regions, right? So then we'll try to look into the comparison between the nearest distance to formal versus semi-formal institution within each village, right? So here is a plot of the formal institution. We then overlay that with, Okay, so we overlay that with the plots of semi and informal institution. So what we find really is that the red dots fill in a lot in terms of the blank area where formal institution doesn't exist. And so we then try to come up with the measure in terms of percentage of the village where it's shorter to reach semi-formal and informal institution, right? So here are the variations in terms of percentage of village in each tambon, as I mentioned, that are closer to semi and informal institution, right? So in general, about 61% of the village in Thailand reach closer to the semi and informal institution than the formal institution. We plot that percentage by province and by rural and urban. We find that the majority of those villages that reach semi-formal and informal institution closer are in the rural area. And that makes sense, right? So all in all, the semi and informal institution reach closer to people, especially in the rural area, right? The next question we do is to look into the role of SFIs. To what extent would SFIs can reach people closer than banks, right? So again, we have points of banks. We then overlay that with points of SFIs. You see really that SFI doesn't really fill in the blank area where banks go, right? So again, we create the measure of percentage of the villages in each tambon where SFI reach closer to people than banks, right? We find that for the whole country, about 45% of the villages in Thailand where SFI reach closer to people than banks. Right? Again, when we plot by province and by rural-urban, we find again that SFI reach closer to people, especially in the rural area, which is expected again. Right? Now, when we try to look at the percentage of the rural villages where SFI reach closer, it's about half. So it means there's still some room for other, or for example, non-traditional service providers. So the last question we try to look into is, what's the role of non-traditional institutions like convenience stores, like 7-Elevens, where we can basically try to target formal financial services? To what extent would those non-traditional institutions reach closer to people comparing to SFIs? Right? So again, these are plots of SFIs, and I'm going to bring in the plots of 7-Elevens as well as other convenience stores. Right? So you can still see that convenience store doesn't really fill in a lot in terms of the gaps of the area. And again, calculating percentage of villages in each tambon where convenience store reach closer to people than SFIs, you find out of total rural villages, there's only 19% that convenience store reach closer, right? So again, this basically implies that convenience stores tend to be more urbanized, and so it perhaps might not be a very good institution that we can use to extend financial services to the rural area, right? So from now, until now, basically, we show some form of proximity, right? The next question we perhaps ask is, to what extent would proximity or distance to finance would indicate some access to finance? Right? We don't have the answer to that right now, but this is basically the ongoing work that we are working on. To come up with such research, we then link this data with another set of data that shows some form of participation in financial markets. So second set of data I'd like to introduce is the geo-reference household debt data that we obtained from the National Credit Bureau data. So National Credit Bureau data has a very big data containing more than 19 million borrowers. So basically it covers almost everyone that borrow in the formal institutions. Right? And these basically make up about 87% of the total household debt that is available in our system. And that means it leaves out 13% of the informal and semi-formal household debt. Right? So credit bureau data come with location tag. So for each borrower, you have postcode, and so we can do geo-referencing there. And so here is a plot of the debt head count, percentage of the population that has debt throughout Thailand. And we find, in general, about 29% of Thai population has debt. There's also variations in terms of this debt head count across area. We find that there's high prevalence in debt head count, especially in Bangkok and vicinity. And these make sense, perhaps because last time we see the closer distance to financial services, especially in this region. Right? We also look into the intensity of debt, basically measured by the median debt per borrower of each tambon, and we plot in black there. Right? So here, there's also large variations across areas in terms of debt intensity. We find, especially in the north and in the south, there's high degree of debt intensity for those who borrow from formal institutions. Right? The next thing we can do is also to look into how debt and borrowers distributed across area. Oops. Here we plot several dots in the graph. Each dot represents 100 borrowers, and there are 3 different colors. So the top 10% borrowers are plotted in red, and the bottom 10% are plotted in blue. Right? So our research basically shows that household debt in Thailand is largely concentrated, and that is that we find that the top 10% borrowers occupy slightly more than 60% of the debt in the total system. Right? And here we also find further that the top 10% borrowers are highly concentrated, especially in the big cities, as well as so basically in the big cities, right? So Bangkok, Nonthaburi, Chonburi in central, Chiang Mai in the north, several major cities in northeast, and Songkhla in the south, right? These distributions are largely, there's large variations in the distribution even within province. So here I basically show you the distribution of debt and borrowers in Bangkok. Right? So within Bangkok itself, you can still see that, for example, there's large concentration of borrowers as well as the top or the debt, especially in the inner Bangkok, right? Where perhaps there's large degree of growth in terms of real estate, building as well as land prices. Right? So the key question perhaps we are going to need to try to look into is to what extent would growth in land and property prices determine high degree of prevalence and intensity of debt. Right? So again, these are the ongoing research that we are going to do. So until this point, we'll look into the prevalence and intensity of debt. Now try to look into the vulnerability of people who borrow. Right? So that's captured here by the degree of the delinquency head count. Right? So we plot the delinquency head count by Tambon. What we find is that there's about 16.6% of borrowers in Thailand that has some delinquent loan, where delinquent loan refers to loan that has more than 90 days overdue. Right? So again, plotting like this, you find large variations across area. And when we look into the differences across province, we find, and region, we basically find that especially in the south and central area, there's large degree of debt delinquency. Right? Again, the set of questions we are exploring is what drives these geographical variations in debt delinquency. Right? Now, another way we try to look at in terms of the vulnerability of people is try to look into how delinquency varies or are affected by different shocks. So by that, we try to link debt data with another set of data that is a satellite-based disaster data. So here is one paper that we did that looked into the potential impact of very big shocks. Here, in this case, is the mega flood that occurred in 2011. Right? So we linked. So the data that we use is a satellite-based, very high resolution as well as high frequency satellite-based flood data is available every day, basically. So this data basically show where the flood occur and the length of time that the flood occur. So it basically show the prevalence as well as intensity of flooding. So we link this data with monthly loan data, 1 year pre of the flood and 1 year post of the flood, right? So from that case, we can then use panel data regression to then come up with the potential impact of the flood on the delinquency of household in the flooded area. So what we find is that time post-flood, we find significant and long-lasting potential impact of the mega flood. Right? So these, for us, is basically show that perhaps Thai households are still largely vulnerable to very big shocks like this. Right? Though this area, basically the industrial area, another group of population that are also largely vulnerable is farmers. right? So farmers are vulnerable simply because there's no sustainable agricultural insurance that are available to them. Even though they can basically smooth some consumption through their informal insurance, but again, when big shock occur, the only insurer for them is the Bank of Agriculture and agricultural cooperatives. So basically, farmers end up accumulating debt during the bad years without sustainable agricultural insurance. So the last thing I'd like to talk about is our ongoing work that try to use satellite data to create agricultural risk information. And this information could be very useful to resolve information asymmetry that is one of the key obstacles to development of agricultural insurance program. Right. So this research basically used two sets of satellite data, the flood data that I already showed you, and another set of data that represents some greenness of the area. We combine the satellite data with other GIS data, and so we basically, based on GIS and satellite data, we try to estimate the agricultural losses of the area. Right? And we basically test that with the ground data from agricultural household surveys over the past 10 years. Right? So the satellite data that we use, apart from the flood data that I mentioned, again, is the normalized difference vegetation index that are available from NASA website. So this is high resolution. Each pixel basically reflects 40 rai of land. So if you think about farmers with a common mean of about 20 rai, so one pixel basically represents some form of 2 or 3 plots, right, which is very, very small, right? So it has a granularity property, and this data come in every 8 days, so high frequency as well. When we plot the time series of the greenness data for 1 year period, we basically find that it reflects the cycle, the crop cycle of rice very nicely. So I think one thing I forgot to mention to you is that in this exercise, we try to estimate the production losses for rice farmers in Thailand. So again, the cycle of NDVI or the greenness basically reflect the crop cycle of rice. And so we use basically deviation from normal of the crop cycle that are observed from this greenness to try to estimate the production losses, right? So 2 exercises that we did. So first, the fact that rice growing areas in Thailand has large variations. We can't just estimate one model for all. We first need to try to cluster rice growing areas into homogeneous production zones. And so we use cluster analysis basically based on the cycle patterns of the greenness data as well as other GIS data, right? And so we come up with basically 15 distinct production zones that basically have different patterns of crop cycle of rice, right? So you find that in the northeast, you find more or less monocrop, whereas in the central, you find 2 or 2.5 crops of rice, right? So this aggregating rice growing area for the whole country into homogeneous production zone, we can then estimate the production losses for each particular zone, right? So by estimating the complex functions of satellite data, right? I won't go through the complex function there, but I like to show you basically the estimating error. And here is a plot of the standard deviation of the estimating errors for the whole country. So we find errors tend to be very small in the northeastern part where the rice growing area are rain-fed, right? But in the central part, there's still some large estimating error simply because there's large variations in terms of how people grow rice in those areas, right? So take this. So again, this exercise will need more ground truthing. But if we believe in this exercise, the estimated model here would allow us to then use all the data that we have in terms of satellite data to estimate the crop cycle for the whole country over time based on the time that we have in terms of the satellite data. Right? So all in all, what we can estimate is the progress of the rice growing from planting, growth, harvest, and we can also detect losses of rice production, right? So you see that we can also detect the drought of 2015 quite well based on this model, right? So all in all, this model create this basically estimated loss data, or in other words, it actually create the loss profile for each and every pixels that grow rice in Thailand. Right? So these are basically variable risk information that is available at very granular level. Right? So each pixel, again, represents 40 couple plots of land. It has large temporal variations. Right? So it's available in near real time for free. And last but not least, it's also available and collected with high transparencies, right? So these data, what can we do with it, right? So one thing we can do is for the insurance company, basically to try to use this risk information to design satellite-based crop insurance, right? Where the payout of the crop insurance for each particular plot will be based on the estimated losses that we observe purely from the satellite data. So the satellite would pay out perhaps when the estimated loss is beyond some threshold, right? So this is basically a typical idea of index-based insurance that are available in many developing countries, right? So the fact that we have data for a long period of time at the very micro level and for the whole country, we can basically explore several designs of insurance contract. It could actually be the contract that sell to individual farmers. It could be contract that sell to group of farmers or cooperatives, or it can even be designed as a risk contingent credit, where in other words, the insurance the credit that is linked with insurance. Right? So another potential for this risk information is to be able to quantify the potential systemic risk that occur for financial institutions. So here again is a risk map that we created from satellite data. We can overlay that with, for example, in this case, the location of the Bank of Agricultural and Agricultural Cooperatives, and the dot basically represent the size of loan portfolio. Right? Now, with some assumption that the borrower in each branch has farm locating within, say, 25 kilometers, we can actually construct the estimated production losses for each of those branches, right? And so here is a plot of the risk profile or the loss profile of each branch over time. So each line basically reflects the loss for the particular year of each branch in two regions, the central region and the northeastern region, where there's large percent of BAAC loan, right? So here what we see is that there's large degree of covariations of losses within the region as well as across regions, especially in bad years. So these are 2011 when the big flood occurred, and so we find that almost all the branches basically experience some form of agricultural losses, right? So these for us basically allow us to see to what extent would these create threat to financial stability, right? The research question that we are yet to explore is to what extent we can use this risk information to do more, to try to better manage this systemic risk, right? And that's to be done, and that's the end of my talk. I hope I convince you the power of GIS data. So several perspectives that I have provided to you in terms of household finance in Thailand based on my data. So first of all, I show large presence of financial service providers, but there's large variations in terms of distance. That's the first point. Second point, I also show that semi and informal institutions as well as SFIs has done a very good job in reaching to people, especially in the rural area, right? From the household debt data, I basically show you that access to debt for Thailand is quite moderate with large concentration and large degree of delinquency, right? The exercise with flood still show large degree of vulnerability, especially to big shocks, right? So, and finally, I show you the potential of GIS data in creating a very powerful, say, risk information data, right? Simply because GIS data has potential in providing information at the very micro level, but for the big picture of the whole countries, for example, GIS/satellite data has high potential in creating necessary data to resolve asymmetric information problem, and so there's high potential for these to try to crowd in finance if the data can be used more effectively. Right? So last but not least, I raised several research questions along the way, and I welcome your thought more in terms of how we can attack this research question or further research question. And that's the end of my talk. I'd like to end with the reference. Thank you very much.